Hello traders, welcome to FreeFX. Today it's Sunday the 30th of August 2015. It's just a few minutes after midnight, so just into the day, and we have a new video here which I would like to use to talk about the currency pair that I've been trading for the past few months, and that's the British pound New Zealand dollar. So you'll see here on the screen that chart. I'd like to really start by trying to focus the video today on what the topic is. That's currency correlations. The trends that we see at the moment have been mixed up in the aftermath of the so-called Black Monday that we saw this past week. And with the Chinese stock market crash, there have been shockwaves through the world markets. This means that we are not certain at the moment what the trends may be, whether they will resume as normal or they will continue to wait for bigger cues, and whether conservative moves will seek capital protection rather than pushing for new trends. Certainly there have been some recovery attempts in the stock market, certainly in the equities, but prior to Black Monday we had been seeing a retreat from historic highs in the FTSE 100, that's the London UK 100 index, and the other equities big, which is the S&P 500 in the US. So obviously this gives us a cause for concern in a sense that the yen crosses take cues from equities and from other risk-sensitive assets like the oil prices. Now, the situation with currency pairs like the British pound, Kiwi dollar, is that we have different cues to consider. And when we have what is known as a synthetic pair, which crosses two majors, the pound US dollar fused with the Kiwi US dollar, we have sometimes a trend that's pulled apart in two different directions. So not only do we have to be knowledgeable and cognizant of the cable's moves, but we also have to be cognizant of the Kiwi moves in relation to the US dollar. I've created this chart because I wanted to, my bias has been for this particular pair one of bullish sentiment, and that's been based on an analysis that goes into two directions. The first one is the fundamental consideration that the throughout sort of from the middle of 2014 to the middle of 2015, the cable went through a huge surge and then subsequent retreat in its bet or in its bid for a pound or a UK pound rate interest rise from the Bank of England, and then these this bid was renewed a few months ago. So since the sort of speculation about this rate rise started again, but since the pound has been struggling, and we've been in a sort of an area of congestion around the mid 150s, and this means that the direction of the pound is very uncertain. So what about the New Zealand dollar? Well, the New Zealand dollar was one of the most bullish or highest yielding currencies in the G7 or G8 group, and this means that anybody short in the Kiwi would have obviously had to long term suffer some negative yield in the form of negative rollover, but at the same time the trend in the Kiwi dollar has been very bearish since the rate hikes stopped and reversed into rate cuts, the currency was suddenly feeling overexposed, and the comments and the subsequent actions from the Royal Bank of New Zealand really did some damage on the Kiwi dollar. So what we see here is also a technical move, and I'd like to start on this chart. So where I'm pointing is the beginning of an inverse head and shoulders neckline. Okay, so this is the neckline around 2.0, and the reverse or inverse head and shoulders, this being the head here, down to this 180. So we have broken this neckline, or you could have it up here if you wanted at 210. So whether you call it 2 or 210, this break has led us all the way up to this 240 level. Now the 240 level is significant because it has featured, as I've mentioned in other videos, in 2005 and in 2008. And it seems that in Black Monday we went through it and on to 250 and above, but at the moment it seems that we have retreated all the way below, and we are stuck in this area of congestion. And we have been here for over 30 trading days, so over a trading month, and it seems that it is a very strong level of resistance. Now there isn't much in terms of supply, so it's a resistance rather than a supply level because there hasn't been a sell-off from here down. So at the moment there's a compression of price against this, and so we are waiting for some direction. Now obviously from a technical point of view, there's a downtrend and a subsequent reversal through the inverse head and shoulders pattern. So what we see here is a really interesting situation. Let's go and talk about this, which is a table I made earlier. So you can see that there are the sort of conflicting or diametrically opposed influences bearing down on this currency pair. So on the left hand side, I've put in the scenario of a bullish pound. So let's say that on the 10th of September, which is only a few days away, the Bank of England rate decision surprised markets, and the vote towards a sort of rate hike was starting to build up in the Monetary Policy Commission, or that there was an actual rate hike on the day. Now this would really generate a lot of momentum in favor of the British pound, and subsequently the currency pair that we are talking about here would take its bid from the British pound. As I was mentioning up to now, the currency pair really takes its bullish bid, or has been taking its bullish bid up to this 240 level from a bearish Kiwi dollar. So the bearish Kiwi dollar has been the main driver of a bullish pound Kiwi dollar. Okay. On the 9th of September, and just a few hours before, on the evening of the 9th of September, we also have the Royal Bank of New Zealand rate decision. Now, if they surprise the markets by, say, raising rates, which is a very low probability outcome, now this would be extremely bearish for the pound Kiwi. Although we'd have to bear in mind that the market can make a false move, because the next day, about sort of 12 hours after the Royal Bank of New Zealand rate decision, there would be the Bank of England rate decision. So it may be a delayed effect, but certainly there'll be a reaction from the market. So this is a very unlikely scenario. So let's talk about this. If the Royal Bank of New Zealand did cut rates again, or did not cut them but continued trying to talk the currency down, this also might have a bullish effect on this pair. And let's talk about the final scenario, which is the bearish pound US dollar. This may happen especially if the Bank of England had talked its way out of any rate hikes this year. So if it gave confirmation that the rate would stay unchanged for the remainder of this year, this would be extremely bearish for the pound Kiwi. And recently we've seen a move this past week of about 400 pips in the cable, and this has really hit the pound Kiwi pair, and this has really given me the confirmation that we are at the moment taking our bid from the pound USD more than the Kiwi USD. And I'd like to show you at this point this currency correlation, which is taken from the fxtrade.oanda.co.uk. So Oanda's produced this, and by selecting this pair, I get this currency correlation chart centered on this particular pair. And you can see that up to a year, which is the extreme right-hand column, against the Kiwi US dollar, you actually have a very strong negative correlation. Okay, so the pound Kiwi maintains a very negative or mirror version movement to the Kiwi US dollar. Okay, so it's been a very clear correlation for the past year. When it comes, however, to the cable, you can see that it is very neutral in terms of a correlation, slightly positive, but so it's really been a positive correlation for the last 6 months, but over a year it's not been so. And again, if you look at the Kiwi US dollar correlation with the pound Kiwi, you can see that for a year, 6 months back, 3 months back, 1 month, and 1 week back, it's been very much a strong negative correlation. So very consistent in that dialogue. So really, this new correlation with the pound is still to be developed, and we must then go to this chart, which is courtesy of FX Top. Okay, and it's a historical comparison chart between the pound dollar, that's in pink, and the red is the pound New Zealand Kiwi. You can see that in 2001, for example, at this peak here, the two pairs were actually in inverse correlation, and that they were also in a sort of mixed correlation here from 2013 to 2015, although the dip here in 2014 was actually the equivalent in the pound Kiwi as in the pound dollar. So this is an interesting chart to try and get a sense of the correlation between the two pairs. Now the other thing, just to finish, so this chart shows to me that from 2001 to now, we've had a downtrend in pound New Zealand dollar. But because of this inverse head and shoulders, we are breaking possibly out of this long-term top or channel top. And if we did break, then we'd have really a lot of scope to recuperate price going up. Bearing in mind, what I've done here is I created some cycles. So from 2001 to 2008, there's a 7-year cycle, and 7-year cycles occur in other asset classes as well, so it's an important number. And from 2008 to 2015, that's another 7 years. And what's important as well is that this is basically 6,000 pips, and that's another 6,000. So in this 7-year period, we've moved 12,000, and then up to this peak here. From this peak to this trough, we've moved another 12,000. But from this peak to this peak, that's 6,000, and from this peak to this peak, that's another 6,000. So we seem to be moving in equal blocks of time and equal blocks of pips. I hope this has sort of helped you a little bit with thinking about currency correlations and cycles and where we might be going next. Thank you very much, and best of luck with trading.